Morning to everybody. My name is Brendan Kurbis, and I am a research scientist at the School of Public Policy at Georgia Tech and a partner in the Internet Governance Project. Welcome to session 4 of the never stopping all-day night train examining platform governance in China and the United States. We have 2 panels in session 4. First, we are going to continue the domestic markets and competition policy discussion from the previous session. Then we will take a short break. And then the second panel will cover cybersecurity and privacy. The panels will be followed by reactions from our discussant, Dr. Roger Creamers from Leiden University, and also interaction with the audience. Without further ado, let's get into our domestic markets and competition policy panel. First up, we have Lianrui Jia and Dwayne Winseck from Carleton University, looking at financialization of Chinese and US platforms. Lianrui, go right ahead.
Okay, great. So hello, everyone. Good morning and good evening. My name is Lianrui Jia, and I'm currently a postdoc researcher at University of Toronto. So today I'll be presenting some of the ongoing research projects I conducted with Professor Dwayne Winseck, who is a political economist and a media historian at Carleton University in Ottawa, Canada. So first off, let me introduce you some of the background context of where do we come from in terms of looking at the platform power. So first of all, of course, as we heard this morning or last night, there is a worldwide kind of a reckoning of the platform power and the rise of platform dominance, which leads to many antitrust and monopoly probings by various government institutions. And therefore, we argue it is important to understand platform power and dominance. And we came from a political economies or critical media industry studies. And we're a true believer in empirical research. Thereby, we tend to gather a lot of data from annual reports, from corporate documents, and from financial data sets. So we build from the ground up. And thirdly, there is a general theorization of platform capitalism, which situates the development of platform and platform economy within the larger transformation of of capitalism in general. And platform capitalism is this coming together of code and commerce, which means the mode of participation is written in the social technical system, and that is also conducive to the circuits and the flow of capital and within the larger transformation of the capitalist economy. So this project is an update from our 2018 paper published in the International Communication Gazette that is titled Political Economy of Chinese Internet Companies. And as you can see that back then we were still studying these formations as internet companies, not as platforms. And we highlighted 3 key trends, that is financialization, concentration, capitalization. And I can share the links to those articles after I finish my presentation. So this presentation or this project is a further update. We're trying to update some of the data set that we're gathering and also take the Chinese portrayal and compare it to the emerging US platforms. And quickly, as a sort of a context, let me first recap of some of the key findings that we illustrated in the 2018 paper. And back then, we're focusing on 3 platforms or 3 companies, that is Baidu, Alibaba, and Tencent. And we found that all of these companies, also mentioned in earlier today or yesterday's presentation, that there are private entities, right? So they are largely controlled by the founding figures, which means that they have a very high voting share. So even though you own, you purchase shares from as a stock market or as a shareholders, you necessarily don't have control or don't have much say in terms of the company's operations or management. And secondly, the role of banks and venture capital funds also play a significant part here, both in terms of the historical fundings, which means when this company all started, they received venture capital funds from all of these US banks and venture capital funds, and also in the current shareholding structures. Right? So for example, we can see the role played by SoftBank in Alibaba, so on and so forth. And also next, we have seen the role of international financial and institutional investors. So in terms of Tencent's shareholding structures, we see that the South African media giant Naspers has held a very long-term but significant position in their shareholdings. So all that is to say that the ownership structure and the kind of the control patterns are very similar to the US platforms. And another finding we've demonstrated through study is that the BAT companies are closely embedded with a global network of financial, political, and media power. And the way that they're doing this is through the appointment of board of directors. And if you actually examine where do they come from or their personal connections, you will find that either they come from a venture capital or financial background, or they're affiliated with some sort of political parties or in China or Hong Kong. And next, what is most significant is the way that the BAT company expands. So they do this through capital-intensive strategies of merger and acquisition. And the picture showed here on the left tells you how many kind of merger and acquisition deals has went through over the years. And on the right-hand side, you can see that various sectors of the Chinese internet are actually either invested by the BAT companies or they are straight out owned by BAT companies. So we have seen a increasing trend in terms of market concentration. So that is our kind of 2008 finding or papers. And now,
excuse
yes.
me, the Chinese is coming through on the English channel. I don't think people English can hear Lianrui speak.
Is it okay? How is it going to be solved? Is it okay now?
Now it's good, yeah.
And as both the business studies, communication, and media studies have advanced a more kind of thorough or more informed understanding of platform economics, platform capitalism, and also there is an emerging line of study that looking and comparing how Chinese social media companies or Chinese platforms having kind of demonstrating a diverging trend from the US ones. So for example, there are some business studies scholars have examined that different ways that Chinese platforms tend to profit versus the US ones. That is through the sell-off of their shares. So for example, Tencent has listed Tencent Music for IPO as a way to grow their companies. And you rarely see the US platforms doing this. And media studies scholars also noticed that Chinese platforms are much better at interconnecting their own ecosystem versus a more walled garden way demonstrated by the US. So that is some kind of contemporary findings, but more in terms of more theory and the key concept that driving this project, we're looking at financialization and historical dynamics with media industry. So defining financialization is a complicated task because in different disciplines, people view financialization in different ways. So for example, you can argue and talk about the financialization of everyday life or the financialization of the overall economy. But in this project, we're looking at financialization and expression in media industries in three ways. So firstly, it is the growth of financial sector and financial assets. So we can see that many of the venture capital and banking sectors have owned shares in this digital platform companies. So this is kind of one way for this trend to manifest. And secondly, for financial institutions and financialization to express, it can also through the control of the shares that the companies have issued, and also through the corporate management. So this is the appointment from the board of directors who have a VC or financial background, who can direct the companies in terms of their investing activities and long-term operating goals. And thirdly, it's through financialization manifests in the media industries through the way that they grow, right? So they pursue a debt-financed growth, which means that they borrow money to purchase other competitors in the market or up-and-coming startup companies. And the consequences of this is a rising in terms of market concentration. And also in the meantime that this company grow very big at a very fast speed, but also they incur large amount of debt. So this chart is one of the studies that Professor Winseck has looked at, because he's a media historian that look at the scene in the Canadian media industry over time. And he found that in the late 90s and early 20th centuries, then media companies are kind of engulfed in this larger dynamics of the capitalist economy. And you can see here that the companies are incurring large amount of debt, and we can see simultaneously a rise in terms of merger and acquisition activities. And some of these large companies didn't survive after they borrow money to purchase smaller companies. And we're basically interested in seeing how this trend has continued and also fared between the Chinese and US platforms. So the research questions are fairly simple and straightforward. So how is financialization manifested in the political economy of leading Chinese and US platform companies? And next, I'm talking about how we're going about to measure and evaluate the extent of financialization. So if you still can remember the concept of financialization in general. So we're building around these 5 indices to measure and look at how the US and Chinese platform companies are evolving in financialization as a strategy, and also propel the trends of financialization of the overall economy. So firstly, we're looking at the access to capital market. So these are manifested in 2 ways. So firstly is the company's use of venture capital funds as a means of growth. And secondly, their larger access to IPOs. And secondly, we're looking at operating profit over time. So this will be contrasted between the operating profit from their core kind of business versus income or profit earned through investment. And thirdly, we're looking at company debt levels. So we measure this in the debt to equity ratio, which basically means for every kind of asset the company owns, how much debt it has. And fourthly, we're looking at merger and acquisition activities, and basically how many deals has gone through each year in what sectors. And lastly, through shareholder values, these are manifested in the share buybacks and issue of dividends. So share buybacks help the company to kind of rise up its stock prices and to control its investors. So in the interest of the time, I'm going to focusing on the first 3.
Great, Lianrui, you have about 5 minutes left.
Great. So in terms of market capitalization, and you can see that basically these companies are growing really fast. So this market cap are blooming over the years. And it can also tell you how volatile these companies are. So compared to 2018, where now Baidu is no longer in the lead. And in the meantime, the US companies that these digital platforms are leading to trillions in terms of market valuation. And even in between these big companies, that the number 1 companies in terms of valuation are greatly, there's a great divergence between the number 1 and the number 100. Right, so even this is the same case in the Chinese context. You can see that Alibaba and Tencent are really the largest in terms of market capitalization compared to other smaller and mid-sized platform companies. And next, these companies are, especially Tencent, Alibaba, and Google, are actively devising venture capital as a way to grow. And especially for Tencent, since 2018, the company has been going through a round of kind of new strategies and setting up venture capital to invest and also rip up returns through the IPO of the company that Tencent has invested has become a mean under which that Tencent has seek growth. And you can see on the chart on the right that Alibaba, Alphabet, which is Google, and Tencent are leading the investment in terms of startups. And next, we're looking at operating profit. So this is in correspondence and in conjunctions with the corporate VC that we just mentioned. And you can see that the other gains here are capturing the gains generated from the investment. So these are contributing to ever increasing segment of revenue, similarly to Alibaba. And in some of the years, the kind of the investment or the profit they've made are even worth more than what they earned from their core business. And similarly, we can see the same trend for Alphabet, that over the years, investments have contributed to a steady stream of income. And next, from debt to equity ratios. And I'll quickly summarize the findings. Basically, Chinese platform companies have more debt compared to the US ones. And the US companies are, in this sense, very little in terms of debt they own, and also very profitable. So that is so much about the divergence, about the differences between the Chinese and US. And here also kind of in terms of looking at the overall financialization of the digital platform companies or economies, we can find there are many common investors on the global scale between Chinese platforms and GAFAM platforms. And to a certain extent, some of the institutional investors also co-own each other. So this leads some scholars to argue that there's an emerging kind of class of capitalists surround the platform economy. And similarly, contrary to a lot of the China-US decoupling or contestation rhetoric that we see in the popular press, when we shift our kind of attention to Southeast Asia market, we'll find that Chinese and US platforms are actually good partners, right? So they are co-investing each other through kind of board of directors appointment or ownership stakes. And together, they're really trying to kind of divulging this emerging market. So quickly, our conclusion. So the way that this company grows is through increasing kind of financialized means of growth that contribute to this thought about platform temporality. So they are future facing. And so in terms of talking about anti-monopoly, we're largely concerned about the current behaviors or competitive action of this company. By thinking of how they are using or leveraging financialization to give us kind of an eye toward the futures and how they erect barriers for new companies or startups. And secondly, it's also, I think, reinforced the US structural power in terms of finance. So even that the US-China has been not on the best terms over the couple of years, we can see that still the US capital market still accept a lot of Chinese IPOs. And this also, I think, kind of reinforces this US structural power and also the dependence between these two nations. And thirdly, it's about the importance of capital market in the Chinese platform development. So I think the Chinese government has increasingly realized that they need to have the capital market as an important service factor and also kind of auxiliating force in terms of funneling its growth. And so that concludes my presentation. So thank you.